Hello everyone, welcome to this video on an exciting topic, that is multi-bagger. So there is no investor in stock market who does not like to have a multi-bagger. That much is the popularity of this term. And the day an investor enters the stock market, he or she will start hunting for multi-baggers. So if it is in a bull market, then there will be lot of stocks that will be labeled as multi-baggers, and it is also the most misutilized term in a bull market. And it is only when the tide turns, or when the market takes a u-turn, or it goes for a deeper correction, you will come to know how many stocks will go worthless. So as Warren Buffett famously said, it is only when the tide goes off you will come to know who are all swimming naked. All said, multi-bagger is a reality. Every serious investor is likely to get one or two or few during the course of his investing journey. So the ideal way to put is multi-bagger happens, and it happens in three ways. One is finding one and riding it successfully. Second, riding some stock that you have inherited or you have got by way of, say, ESOPs. And third, pure luck. So let us get into each of these in detail. So finding one. So where can you find multi-baggers? So generally, you can find multi-baggers in emerging growth sectors where growth rates are very high. And in this case, another important thing that will happen is PE re-rating, because PE re-rating is a very important driver of this multi-bagger returns. So if you manage to get some stock at so high growth company at a decent or right PE multiple, and after your entry the PE multiple expands, then you are most likely to get a multi-bagger. So if I have to point two or three recent examples, it would be something like a D-Mart from the retail sector, or Dixon Technologies from electronics manufacturing, or IRCTC from e-commerce. So if you happen to look at their valuation at the time of listing, you can see that the PE multiple of these stocks have expanded many times, say 3 or 4 or 5 times. So that itself is a 3 or 4 or 5 times return, and then their earnings has been growing at a very high rate. So if the earnings is growing at 25%, then it is more likely to double. The earnings is more likely to double in 3 years. So this high growth rate combined with PE re-rating is the way multi-baggers actually happens from the emerging growth sectors. And multi-baggers can also come from existing sectors, or existing sectors, say so a latest example to point out could be mid-cap IT companies, or the metal sector, or the cyclicals. So what happens to cyclicals is that at the bottom of the cycle, these companies may be making losses and they may be sitting in a mountain of debt. So when the cycle turns, then the earnings will start coming, and the stock will start getting valued on the basis of earnings. And when they repay the debt, this is where the real trick lies. When they repay the debt, then it will get the entire valuation will gets added to equity value, or the market capitalization. So that is how these stocks can turn out to be multi-baggers. But again, here also the most critical aspect is the entry point. So one should be able to enter just before the inflection point, or enter at a time when the valuations are so low. So again, this can also happen from underperforming companies. A classic case to point out is Unilever. Unilever was considered a defensive or low growth company in even in 2010. So from then, in the last decade, the stock went up more than 10 times. So what exactly happened is that here again, the sales of this company just doubled, or just more than doubled in that 10 years, but the margin expanded significantly, or the margin actually doubled for the company. So earnings grew at much faster pace than the sales, whereas the PE expanded from 25 times to more than 75 times. So there is 2 times growth in sales, 2 times expansion margin, and 3 times PE rating. So this has come from an existing company that was considered defensive, or where the growth was considered a bit saturated. So these are the ways in which actually multi-baggers can happen, but it is very easy to point out these things, and mostly in the hindsight, because it is quite difficult to figure out what triggers can actually lead to re-rating of a stock, and some of these things play in the midway. So it is very difficult to forecast, and like Warren Buffett has famously said, in the investing world, the rear view mirror is more clearer than the windshield. So that is it. So this is the first thing, finding one, or where can you find one. And the suppose, imagine that you have found a stock that is going to be multi-bagger. The most important thing is riding it successfully. So this is the most tricky part, and this has to do with the behavioral side of investing, because there can be many events that can force you to exit the stock. Imagine that you are sitting in a you have found a stock that can potentially become multi-bagger, but the market suddenly falls. Then if you are sitting at a profit, you may have a tendency to exit that stock at that point of time, and after that it may turn out to be a multi-bagger. The second thing is the noise. Suppose you have bought a stock, the stock is doing well, and the valuation has turned expensive, then you will be bombarded with lot of thoughts like the valuation has gone too much, or it is expensive, or it cannot go up from here, or it can only fall from here. You will hear lot of things from every corner, and this can also force you to sell the stock. Sometimes the companies can throw negative surprises, whether it is in terms of bad earnings or any shake-up in the management. All these things can also affect your decisions, or will force you to get out of it. So say Infosys has faced such things in the past. So there has been a lot of management issues in that company. If you take the second largest bank by market value, the ICICI Bank, it has the kind of issues it has gone through in the past. If nobody would have bought the stock, or if somebody was holding, he or she would have also exited. So these are broader factors that actually falls on the behavioral side of investing. So even if you find one, riding it is also very difficult. That is another important part. And the third part is luck. So suppose you are getting into the stock market in a bullish phase, you manage to get out into a company through the IPO, or a company from the secondary market, and it starts moving off. All of a sudden it expands multifold, and during this period you don't see the market fall, or you don't see any management issues or any other kind of shake-up, then you are likely to have a multi-bagger, and then it is and you are also very lucky in that aspect. So these are the three broader ways in which multi-baggers happen actually. And even if you don't get a multi-bagger in very few years of time, don't be worried at all, because for every serious investor, multi-baggers happen during the course of their investing journey. The only thing is we have to put all the learnings about the market, or understanding of the cycles, or everything together. That's all. So now I would like to invite your attention towards 2-3 things. One is towards an article on this topic, an article on multi-baggers by our senior team leader and a well-known person, Arati Krishnan, where she has written about the various factors behind a multi-bagger with detailed illustrations. So please do read that article. So the link to the article is given in the description below. The second is that I have mentioned that the multi-baggers can also come from the cyclical sector. So we have recently done the result review of steel sector, or the stocks from steel sector. So here again you can go through the article and find out how the valuations of these companies have moved up because of the upturn in the steel cycle, and where they are placed now. The third is we have also put out an article on how Eicher Motors turned out to be a multi-bagger and the important twist that actually happened in that company, because the company because it was something different from what the perception of the initial investors were. So an interesting twist happened in between. So again, for all these articles, we are giving the link in the description below. So please go through. And the stocks or sectors that I have discussed here are only for illustrative purposes, and these are not our recommendations. For our recommendations, log on to primeinvestor.in. And if you like this video, please do subscribe to our channel. Thank you.